Short at 58.5 on the re-entry short here. Divergence moves across the board. Just remember, futures trading is risky. Only risk capital is used. I'm now, because of the way I see these riggers acting, they're relentless today. They're not backing off. That quadruple tap on 50 really scares me because that tells me they are absolutely committed, working overtime to block the flow of the downside of the market. Completely criminal. And you'd be surprised, all these hundreds of rooms out there, they don't even know the market's rigged. It's shocking. They just go, wow, market's kind of pushing higher here. I guess it's bullish. Looks bullish. And you just sit there and you go, you're kidding, right? Anyway, I'm not fighting it. These inflection points I'm hitting all should have backed off and been winning trades. I have multi-year track record of that happening. Today the riggers are out of control, and they're still out of control. They're still not letting this thing back off. So be patient, but they're not letting it back off. I'm waiting. I got the divergence signs. I got all these signs, and they just will not let this market back off. It's going to crash at some point because any kind of heavy duty artificial manipulation like this has to result in a crash. They can't keep doing this all day, and they're not getting the big response. They're getting a little response from some of the algos I think out there are forcing their systems on the long side. But they're going to regret it in a couple hours. Anyway, we're short at 58.50. I'm going to try to hold this once again for a swing. I hope it'll work. But the problem with swings you hold, whereas scalps you're just trying to pick off a few points. I got to do that eventually if to do some repair on things here. But right now the key number 56 and then 54. And look, they won't even let 60 go. I never seen such heavy manipulation as this in the last year. What you're seeing right now is the most heavily manipulated upside market that I've seen in the last year. I'm serious. I have not seen them. I don't know why they're doing it. Let me quickly check the news here. It's creepy. In my view, it's creepy because I better get my TV on mute here. I don't know who that sad sack is there. We'll find out. I'm sorry, but I got to get my CNBC on mute so I can watch these headlines because these riggers are out for blood today. They are trying real hard to destroy all the short sellers. They got some agenda. I don't know what it is, but they got it. Anyway, we're short up here at 58.50. They're down under our trade at least 58.50, and I'm targeting this should be a larger scale move, at least to 42. So for right now, just move it to 40, 43 even for our exit. Again, I'm still just watching this in shock that they are playing this kind of game. And for what reason? Let's see. Wells Fargo shares slip. That's the big headline. That's a bearish headline. Why is the market getting goosed higher? Not that Wells Fargo slipping is the end of the world, but the tone, that's a bearish kind of tone thing. JC Penney shares tank. Look at the language here. Look at this. When earnings look this great, it's actually a bad time to invest in. All these negative headlines sounds like they're trying to manipulate people into being short, and then for some reason goosing them up and cleaning them out. Tesla has to raise 10 billion. All these negative articles. And these are the sycophants here, these CNBC people. They collude with, speaking of collusion, they really do collude. They collude with the riggers because they're running all these negative articles, yet they're goosing the market up. It's very strange. Anyway, oil's up, topping 80 on the cash. Oh, let's artificially ramp up the stock market then. I don't get that, but we're long oil, as you know. I've got us in this um, oil fund that we've been in for quite some while in the room, and I re-recommended it just a few weeks ago, paying 9.5%, and it's an ETF of all the top oil transportation storage firms, the biggest and the best. ETP, all of them, Enterprise, the biggest oil people, best top companies, and they do all the work for it. I used to hold those individually, those REITs, and the tax is very complicated. My accountant would say, "Gee, thanks, you're keeping us busy over here," and I'd say, "Oh, okay." Well, then I discovered this tortoise fund, and I put everybody in it. I think it was a few weeks ago in the room here, and it's worked out really good. We're just holding. We get a little benefit from the price of oil on the fund, and I'm worried about this deal, by the way, just from a social analysis. I don't know if this deal is going to work out.
Order pending.
I don't want to say too much. In guy language, I mean, hey, I'm just talking because I just generally say what I think because we're traders and we're real people. And in guy language, she's a lot hotter than him. And those deals don't usually last, but she got to be the princess or whatever it is, so she'll make some sacrifices. But I just keep your eye on this. You'll remember this day in the room here where I brought that up and see what you think. He looks too happy and she looks like, aha, yeah, now I'm the princess of the world or whatever it is. And I don't know.
Order pending.
Her dad's not coming to the wedding. Why is that? What's up? What is all, there's some inner child work to be done on this deal. I'm just having fun. We're just trading and we're short here, trying to have some fun. Oh, good old Joe Lieberman's back out for no reason. Just, I guess, to give a heave ho on the embassy move. That's good. Jewish fellow, so he's going to stamp it with his approval. Relatively insignificant guy. See, am I right? Am I right? Now his face has that little slight look of worry, like, uh-oh. Am I looking forward to a scandal in a few years? Anyway, check it out and see if my forecast be right. I don't wish him well. They just seem like very nice people, but anyway. SEC sets up fake initial coin offering site to show how easily you can be scammed. Hey, SEC, Security and Exchange Commission, why don't you do your job and police the riggers instead of wasting our money and time setting up fake coin offerings to show people, see how easy you can be scammed? What a if this I got to read that later. What a bunch of idiots. See, this is why I call them names. These people should be policing these riggers that are spoofing the futures markets here. Finally, they're backing off a little. But how much divergence does it take? Anyway, look, all I'm trying to point out, where are the bullish headlines? Why is the market getting artificially goosed by the riggers? And then we get slapped in the face with them telling us that the SEC is setting up scam deals to show people, see how easy it is for you to get scammed. Well, how does that help them? Why don't you police the scams that are out there and warn them? Anyway, enough of this. One more quick check. They are backing off here. Okay, we got to watch that 50 handle again. 48, key number, 48 break. Let me get on this. Enough of the news. There's nothing bullish. So now they're pulling back, so enough of them. 50 breaking, watching 48 very carefully. 48 cracking. Should I move the 43s for right now? Move the 43s down to 38. Back to that original target we had. Remember that 38? 38, 38. Okay. Remember this good old 38? It's still there. I just moved them down there. Now, they re. Okay, let me get on this thing. I'm on it. I just was having some fun watching the news. I was going, where's the bullish news? Okay, we're readjusting the fibs. I'm on it now. I'm just having to respond to how rigged this thing is. So I'm trying to keep a light humor about things, and now we're in a big swing trade. And if it works like I expect, that underlying force that I'm still detecting still calls for another down day to neutralize. Yesterday was up 62. Remember we had that 193 crash on Tuesday, right? It's very important. It was actually down 270 at one point. Remember that. Closed 193. Up 62 yesterday, crashed on the indexes today on Globex, and then the goosers came in real desperate, ramping them up for some reason, trying to save the market or whatever they think they're doing. You with me? Okay. So this is my last shot at the potential for a swing trade. If this doesn't pan out, then I'm calling off all swing trades and we're just going into scalping. But not for now, not yet, because this could turn into, right now I'm seeing signs that this could turn into a trend down move. When the market finally wakes up and realizes that it's still got all this underlying pressure, it needs at least one more down day, like a down 60 to 80 type day, to neutralize the underlying indicators pressure to drive that should be willing to drive the market down. Does that make sense? I hope so. So, yeah, it's going to be disappointing if they go back up to 60 again, but for right now, the market is trying to start a trend down move. Doesn't mean it necessarily will, but it's starting it. And most of the time when this sets up, it does end up trending down. You've got a very artificially upside goosed market. And like I said, those 90% of the time when the Fed riggers do that, it ends in a crash. It has to. It has to blow off all that steam of that upside rigging. So let's see now. We're going to try to hold and see if we can get a trend down move started under, what's the key number here? I got 49.50, and it correlates almost with this center of the opening range. So moving under 50, that's the first key. They're still propping up the 50 handle. If we can blow out 50 and get 48 going, that'll put us right at the center of the fib move. I will then be watching for the center to turn into the lower move at 44.75. The full fib retracements down here at 41, and I've got 38. Good, this is good. I've got 38 pegged as a potential move that was into the fourth wave, as you recall, the top of the fourth wave right there. So now here's what it all tells me. And these are swing trades that I'm doing here. This is a little different animal than our regular scalps. Normally we'd be out here with like a 5-point scalp or whatever. And that may end up being the right thing to do if the riggers come in and start jamming the market back up. But odds favor they will form, with patience, a trend down move here. And if so, that should, I don't know. I mean, maybe they're just insane today and they're just not going to let 50 handle go. But it should, and if they do, we're going to target a move. Now we have a nice solid zone we can anticipate, and that is the 41 to 38 zone. And we're going to just have to see how they act. Hey, I don't have to apologize to you for the riggers doing what they're doing today. All I can do is identify it and show you and do my best to trade the right things around it. Well, doing the right things that I've successfully done for years, that, like I said before, has produced as much as 83 winning days in a row, which I don't know of any trader in history that's ever done that. I think I'm the only one, and that's, uh, a CTA or an individual trader or a popular person in a room or something. I've never heard of such a thing. But every now and then, like today, for some, and it's usually always the rigger's fault. For some reason,
Order pending.
they get some agenda and see how they're doing it now still with these spike candles. I don't know why they're playing this game. Those aren't real buyers. Real buyers are just like us. They're shorting and going long. They're looking for a good deal. They're looking for a market that has some flow. Okay, so while we're sitting in this trade, we got a little cushion, little bit, not much. We're short at 58.50. I want to see him break the 58, the 50 handle and crunch him down to 48, and from there smash that thing down into this zone here. That's our target. Naturally, we'll watch the full fib retrace because if the riggers are going to prop it, they may go for that. They're measuring the same things we are. But for now, let me get over to crude oil. We're trading the July crude oil. We roll over every month. Right after the 15th of the month, we roll over to the 2 months out. So here it is May 15th, so we're trading the Julys. Okay, watch for 50 to break down. We got a lot of pent up underlying bearishness that needs a down day in the market. Something to neutralize this market. And whether that comes today in the form of a crash, whether it comes if they prop it up today and it comes tomorrow, all that's I don't know. I just work here. I just try to interpret this stuff, read it for you, give you insight where you will not absolutely get anywhere else. No one says the stuff I say about the markets and the trading. So, I'm just telling you that because you're in a unique room, a unique situation. But it is a tricky day, and it's my fault because I traded. If I don't trade, but then you won't like that because you say, why aren't you trading? Or whatever. But they're nuts. The riggers are nuts today. Yesterday was pretty bad, but we ended up with a nice day. We had a 625 gain on the first trade, 1050 loss second one because they were doing what they're doing now. Only today is really bad. And then we had a 13-point gain, up 9.25. We're done for the day. But I detected and talked about the rigging like I am today. But today they're off the charts. I mean, look how they won't even let 50 go. They're doing the same crap. A 51.50, 51 got a double tap here, or no? No, we still got another quadruple tap on 50, and they won't bust it. It's the most fake thing I've ever seen in my life. Why can't they bust 50? Let 50 go, you idiots. It's no big deal. But when it does, probably the market will crash some. Hopefully it'll crash right down into this zone. That's what we're looking for. Okay, we're back on 50. Let's see if these guys are going to stop playing games and let 50 break. What a quintuple tap. There it is, breaking the 49.75. Oh my God, what's happening? World's coming to an end. Okay, there's that 48, center of the opening range coming in, or center of the fifth wave. So watch for 48 to crack, for a move down to 45. We got to watch 45 because that's the full fib retrace of this fifth wave move. However, in Fibonacci and Elliott wave terminology, usually when you get that C wave, they're going to go somewhere between the Fibonacci pullback and the top of the fourth wave. Normally, traders want to project for the top of the fourth wave, maybe into the fourth wave. A lot of times they'll go in and crunch the whole fourth wave, but right now this is the top of the fourth wave. That's the Fibonacci pullback number, 45. They did break that. They went to the center of the fifth wave, but there really should be a move down in this zone, at least to this Fibonacci number. And I'm thinking maybe we should take that just for the point of, and then going into scalping. I'm thinking that's what we should do. Let's try to, okay, let's change the strategy. Hold on, hold on. No, no, no. They're trending down. They're forming a trend down pattern. We got to give it some room. Even though we end up a little frustrated, everything I'm seeing here is suggesting to me that with a little more patience, this thing is going to trend down. It should be willing to trend down, and that means breaking 48, losing 46, and moving them down into this zone here, 41 to 38 zone. So be patient. Let me go over the crude oil, and we'll watch this thing real carefully. So crude oil, we start from 545, and it is choppy today because the headlines were all crude oil $80. Well, I don't see $80. I see the futures at 72-ish. Whatever, that's cool. So 545. You could have taken this short. It was all set up. Here's how it works. A buyer sell channel arrow opens up. That's this arrow here. The candle closes and locks the arrow on the candle. That's the first step. Step 2 are the price pressure bands open. That's these thin dashed dotted bands here, or dashed solid bands. Are the price pressure bands open? Yes. That puts more pressure on the downside. And then has the orange filter line been crossed by the cobra? That's true on this candle here. You see that's that dotted line crossing into this flattening orange line. They dipped them down to 48 again. They got to break them here. Everything's setting up for a trend down move. Be patient. Then the next thing are the dynamic trend bands. Have they crossed under, which they already had? Are they matching color? Yes. And those conditions are met. So you're short right here on the crude oil, 72.17. Now I know it's 30 seconds before 5:45, but just you have to use common sense. Or you could have waited and then trade them here at the Cobra, whatever. But up in here is a short 17. 17 comes down to 08 for 9 ticks here, jumps back up and comes down. So we're going to call this an 8-tick winner. You want to grab the fastest money possible. We'll call that an 8-tick winner, or with patience, a 10-tick winner. Look at this ridiculous market. Look at how these riggers are now propping up the center of the fifth wave with a triple tap on 48, and they won't let it break, and now they're back trying to prop up 50. But we are in, not quite there, but very close to being in a trend. Well, we're in a trend down move right now, but not officially. They're going to have to move a little lower and kick. We're right there now. That the things I'm looking at, we should be very close. Technically we're in a trend down move right now. That doesn't mean it's necessarily going to hold, especially with a day like today with these clown show riggers. Anyway, market went down. No second level trade because there's no counter arrow. To have a second level trade, you got to get a counter buy arrow in this trend and then shift back to a sell arrow. Then you can take the next yellow dot, but we didn't get that. So it's an extended move, so normally you have to be very careful on the first crossover unless the pattern is really ideal and all the conditions are met here, and most importantly a crossover and matching color, the DTBs. You got to buy that stuff. That's a lot of pressure on the buy side there. So the pullback came in right after the Cobra crossing the flattening orange line at 94, and they jumped up to give us the 10 ticks on that deal. And again, see, it wasn't that large of a move. You don't have the right setup here, but a lot of times just observe the first. Here comes that trend down possibility here. I'm watching everything. Let's just see if the riggers are going to start letting them go. Sell down. There we go. Breaking 48. Okay, here we go. Watching 45 very carefully. I'm on top of it here. Forget crude oil. I'll move crude oil back, but crude oil's not doing much. They're watching everything here, breaking under 48, watching 45 carefully in a trend down move, and then a jam down to this zone, which is 41 to 38. We're in a trend down mood. Let's see if the riggers, if they can crash this thing a little bit here. But I think they're pretty desperate, so we're going to have to. I think we're going to want to just get out and not care if they go lower and really crash out. I think they should and would and they must to get the market more neutralized. But I don't want to sit here all day waiting for them and then have them like they're doing now, kind of go jamming back up. Let's start considering targeting instead of down here. Let's look at targeting the 45 to 41 zone. I'm going to move this up and I'm going to place it over just under this blue line because the blue color is significant. That's our full fib retrace at 45. So I'm now saying 45 to 41. And the reason for the zone, because if they start really kicking in the crash here, which they're not, the riggers keep propping it up, which they rarely do, we might see them come down here and spike into this zone, giving us an extra point or two. So I want to stick it out if we can. See, everything I got suggests that they're going to start trending down, but look at this. See these phony spike candles? The riggers are propping up the market. I'm serious. I hope you believe me. This today is one of the worst rigging jobs I've seen in a long time. The last one was at last month of the first quarter of this year, where they just went nuts. I'd like to show you the chart, but I don't want to take my eyes off this thing. Even though I'm pretty confident they're going to come down into this zone as soon as the game start getting played by the riggers and they break 48. I don't want to take my eyes off the charts. But I'll show you on the dailies. And that's what caused the crash. Remember that big crash we had a few months ago? Which, by the way, for those of you new to the room, I forecasted that 3 days before it happened. I told our traders sell 3/4 of your stocks, the ones you're really attached to, hang on to small portions of it, clean out your stocks, put hedge funds on, put inverse funds on, and stay ready. Okay, watching for 45 to 41 zone. Let's see if they can break them down. I got my finger on the trigger. I'm 100% concentrating on my charts. Losing 48. See, they just won't even let 48 go. It's only 50% of the fifth wave move. The most ridiculous thing I've ever seen. I don't know why they feel so compelled to prop up the markets. And we're talking about minor amounts. The Dow was down $193 on Tuesday. Ooh, ooh, ooh. Oh my God, what are we going to do? I don't know. I can't tell you. I don't want to check the news anymore. We kind of already checked it. There's no bullish news. See, here they go. God, it's disgusting. Won't let 50 crack. Won't even let 48 solidly crack. And now they're back to playing goosing games with the candles. Hold on. I'm doing my best here. I'm trying to follow what to me suggests this should be, that last goose should be a short up there. Where did it go? 52. That should have been technically a short if I wasn't already short. We got to break 48, and then under 48, I'm looking for a downside smash down under 45. to 41 zone. And they may go down to the fib and maybe just get blasted. That's what I'm rather hoping. Here we go. Stay ready. Stay ready. Stay ready. Trying to break 48 down and watch for a possible selling pile-on to drive the price down to 45. And I'm hoping if they do that, they'll take it down to that fib number, cracking 48. They'll kind of get a harder crunch to the downside, smash through the 48s. I mean, through 48, yes, first things first. Then smash through the 45s, and hopefully the momentum drive that'll take them through 45 will get us in the center of this range, 42.50. So I'm kind of targeting now officially, semi-officially, 42.50. But you see, they will not let 48 go even. But we're in a trend down mode here. It should break. 48 breaking, watching for 42.50 in a perfect world, but with caution at 45 to possibly just let them go there because this, you can see the rigging is it's nuts. It's really bad. And I can't really even come up with any valid reason why they're doing it. If there was, I'd be willing to buy them and get long, but there's nothing to support why they're so excessively rigging the market up and propping it up. So anyway, don't mind my rap. It's just what I do. Try to give you as much information while we're in the room. It's just reading this market and trying to keep us on the right side here. Let's break. See, they won't let 48 go, and that's to me is just, instead of the SEC playing games, setting up scams to show people how easily they can be scammed. That's like walking up somebody in the street and punching them in the face to show them to be careful about getting in a fight, because see how bad that hurts. Is that the right thing to do? Is that even an adult thing to do? But the so-called regulators, the SEC, by their own admittance, right in this article in the sycophant CNBC network, are admitting that that's what they did. I got to read that. Okay, breaking 48. Come on, riggers. Enough is enough with the propping up 48. Crack them down to 45. I'm really thinking we better get out at 45. I think if they break 48, they'll spill down there. We'll try to get 42. We'll try to get 42, but watch out for that 45. Okay, here we go, because that 45 is that fib number, and they may prop the crap out of that. Stay ready to jump out anytime. 45 or lower, we're going to try to get out. Let's see if they hit them hard. We still haven't officially got rid of 48. See that little dip to 46. We're in a trend down mode. Let's hold short just a little long. I suppose I should have grabbed that 46, but this should have a lot more punch on the downside. You can see everything I'm telling you about is a proof. This shouldn't be choppy. This should be flowing. These price pressure bands should be open. This thing should be flowing to the downside or crunching hard, getting hit hard. They made that little micro dip under 48 to 46. I thought, okay, here we go. Here comes our 43s. And then this crap again. It's embarrassing. I'm just talking about a lot because I'm kind of trying to keep my anger at bay, and the fact that it makes trading so difficult, making decisions difficult, that I have to deploy these methods of kind of insulting these riggers a little bit here. Okay, 46. Let's do this. I'm a little bit concerned about all this. It's really bothering me. I think they're going to 42.50, 43. Let's move it up to 45. That's the fib number. I almost hate to do it, but let's just move it to 45. They front ran the fib number by a point on this little micro dip here and then re-goosed them. Let's expect that they're going to break it down and go to 45, and that's our new limit. 45 is the new limit. Stay ready to jump out anytime. I may call for a market exit at the market. Watch it now for them
Order
to go down,
pending.
break 46, give us 45, and I'll just be satisfied with that. And if they just keep collapsing, then that's just a big whatever, because this is too hard to peg. This thing should be, have already traded 43. Let's see if they can crash them a little more. We're trying to get 45 out of the deal, and it is like pulling teeth with these stupid riggers. Try to get 45 here. The market's destiny is for a down day at some point to neutralize everything. Them artificially propping it up is only making things worse. It's only going to create a crash. But all I want now is 45. We've got 7.5 coming in. Let's break 48 rock solid. Get that 46 going. Crack the 46 and smoke them down to 45, and then we'll get out with a sigh of relief here. What a fiasco. What a bunch of nonsense, riggers. You should be embarrassed. You're an embarrassment to the markets. Come on, crack it, crack it, crack it, crack it. Exit at the
Or
market right there.
target
Exit right
filled.
there. I don't care. 7.25, exit. Hell with it. I don't want to do this anymore. I still think they're going to crash, and they'll probably lose 45, and they'll probably go down to 37. But I lost my patience. There's 46. There's 46. We got out at 47. Yeah, and there's our 250. Yeah, hell with you people. Remember I said 250, 275 last dip low on that yellow line. I know, I know, I know. I could have held, but I'm just getting sick of it. I didn't want them to go back to 50. So we got out 47. It was still a good deal. Plus 1150 on that deal. 1150 points. Multiple contract traders. Probably took some off at 10. That's our normal rule. Yeah, and now I'm a little mad at myself because we knew they were going to go 250. They went 275. We knew they were going to at least go 3, but that's all right. I think we did the right things. These with the way they're acting, they could have went 47, 46.50. If, in other words, hitting 46 again, and could have went right back up to 51. And then we're like, oh, we woulda, shoulda, coulda got out. Didn't you see it was a double tap on that? Everything's crystal clear in hindsight, isn't it? But we got out, and I'm happy. We got 1150, so good deal. Congratulations.